Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Wednesday the 23rd of March. Now major markets are a little bit mixed today. There's a continued move to the upside on indices, but to be honest, forex major pairs and commodities are a little bit uncertain, consolidating a little bit there. It's interesting that we are still seeing these bond yields going higher. Certainly for treasury yields, as the markets continue to factor in higher and more aggressive tightening from the Federal Reserve. Equity markets have not really reacted to that yet, and I think that that's something that we need to keep an eye on in the coming days. There is a speech by Fed Chair Powell today, and he spoke on Monday, and he certainly affected bond markets on Monday, and the dollar strengthened on the back of that, but it'll be interesting to see what sort of effect he has today. Now, the charts we've got to look out for today, we've got UK. We've had UK inflation out today, so we're looking at the sterling dollar chart and the impact that that has had. Sterling had a big breakout yesterday. We're also looking out for the gold chart, which, to be honest, is looking at a bit of a consolidation play at the moment, but can that break that mold and start to move in a direction? And also looking at the SP500 futures, which have been pushing higher, but it's approaching a key level of resistance. So let's have a look. So moving on to the Infinox MT5 platform, starting off with sterling dollar, which has had this impressive rally actually over the past week or so, and it's actually now broken above that 132.10 level of resistance, and that actually on the 4-hour chart brings us through to a base pattern. Look at that head and shoulders reversal pattern, which actually implies around about 200 pips or so of recovery to 134 big figure. So we'd be looking at this and thinking, well, if this starts to now pull back into this breakout support area that you've got in place around sort of 131.90, 132.10, that is a good area for a potential buying opportunity. That 4-hour RSI just sort of rolling over slightly in the last hour or so. What we have seen actually is inflation coming up higher than expected in the UK, but in the response to that, actually cable has fallen, and I think any unwinding move that starts to find support in that band there between 31.90, 32.10 is a buying opportunity for cable. It's got a decent uptrend recovery there play. You've got the strong momentum on the 4-hour chart as well, so it's looking good for a recovery back towards this sort of 134 area, which essentially is old sort of mid pivot area for the downtrend channel that we have still in place. Now, the gold chart is interesting because what we have seen is the reaction lower on the improvement in sentiment, and then this of broader markets. And then we have seen a consolidation. Gold is starting to move sideways in this tight consolidation. You can see that the RSI is basically bang on 50, so very much neutrally configured. But what I've got here is this sort of range of support that we have in place. On the crosshair, you can see between sort of 1880 up towards 1890 area. That is a key basis of support, because essentially if that gets broken to the downside, that completes a big head and shoulders top pattern. So that would be the risk there. But at the moment we are consolidating sideways on gold. Got the 4-hour chart, which shows a slight negative bias to that. You can see the 4-hour RSI sort of failing at 50, going back towards 40, suggests a slight sort of air of selling into strength. And a pressure to the downside. So there is a slight negative bias, but nothing too decisive yet. But it's something that I think we'll be keeping an eye on. The resistance at 1940 to 1950 on that 4-hour chart there. And finally, on the S&P futures, well, it's actually completed a base pattern. Equity markets have been remarkably strong in the last week and a half, despite that sharp move higher on bond yields. We've seen that equity markets continue to move higher, moving above 44.18 on that S&P 500 futures chart. Completed essentially a base pattern, which I think will certainly suggest we're sort of pushing towards 45.85, a test of the resistance overhead from the January-February levels. But it's interesting to see if this continues. Well, the momentum at the moment is okay. It's pushing higher to above 50 on the daily RSI. The 4-hour RSI is still sort of hovering in positive configuration. No real signs yet of a correction, although a very slight slowing, you could argue. But I think at the moment it's still positive and looking higher. But as I said, that key resistance lies overhead, and it starts to come in around the sort of 45.50 area to 45.85 area. So that's the sort of next target area for the S&P futures. But that support band, I think, is also going to be key. That's 43.80 to 44.20 effectively. So that needs to now hold. Thanks for watching. I hope you found that useful for your trading. I'll be back on Friday to assess the impact of the flash PMI data and looking at how markets are set up at the end of another trading week. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much.